A lot of new traders think that the trading is all about how to enter trades in a way where they're going to win. And it's nothing further from truth. It's actually how do you manage your trade once you enter that determines the outcome of the trade most of the time. Obviously, if you want to increase your percentage of winning, you should follow a decent trading technique. But all those courses that are for sale on the internet by people who never traded in their lives successfully are full of shit. Why? Well, because it's not about the super secret way of how to enter and exiting trades and become super profitable. No, it's about once you're in a trade, how understand where you are in the market context and how to exit it, even if you're in a losing trade as well. Now, let me show you what I mean and why you shouldn't be chasing the new shiny toy or the new shiny course in this instance, which promises you the secret way that nobody knows about how to trade. It's the same thing as a fitness industry. We all know that you shouldn't eat this or that, right? Eat the salads, eat the protein, go to the gym, done. But every year there's a billion books come out with super programs and all of that nonsense, right? So same thing with this industry, with the trading industry. All these people are just selling courses and don't contribute anything of substance because they don't have any substance. They didn't put enough trigger time in the markets like I have for 20 years to actually know what makes the difference and what doesn't make the difference. So in this video, I'm going to show you what exactly, how you can exactly manage a trade, whether you enter it short or long, and both of the outcomes will be winning outcomes. Now, let's dive in. So the problem with all the novice traders is that they find some kind of method of trading. They trade for a little while and then they get in trouble. When they get in trouble, they think that, oh my goodness, that's probably because this method it doesn't work. It has some kind of flaw, and they move on. It's called the shiny new toy syndrome, right? Where you constantly seek new, improved, and better, and you never stop actually. You never stop looking for something which does not exist. There's no holy grail in trading. There is no holy grail. And one of the latest books of Jack Schwager of the Market Wizard series, which you should probably read about all these successful traders. The latest one is called Unknown Traders, and it profiles people who were successful in trading who did not come from a background of Wall Street or some other background, so proprietary traders, right? And they're all millionaires, very successful, and one of them is Peter Brandt. Peter Brandt is an old dude who is a millionaire, obviously, and he still uses basic TA, basic technical analysis, which is super, well, not flawed, but it basically works 50% of the time. So he uses classical shapes and trend lines and horizontal support and resistances, etc., etc., etc. So it's basic stuff. And he makes millions of dollars. Now, if most new novice traders would use just basic technical analysis, they would get slaughtered. And that's what a lot of people are finding out after watching all those numerous YouTube videos teaching them only technical analysis, and if price breaks some kind of line, that means that it's a buy and blah, blah, whatever. It's all nonsense. Yes, there is technical analysis can work, but what's more important is how you manage the trade, and that's what Peter Brandt actually addresses in as one of the traders who talks about winning in the markets. It's trade management. Trade management is more important than your criteria for entry and exiting trades. You can make bad trades work as well. And I'm going to show you exactly what I mean in this example right now. So this is a euro dollar. You're looking at a chart of euro dollar. And so we bounced from the lows. We made a lower low. We made a higher high. So we have a trend switch making now it went from making lower lows, lower highs, into making a higher highs and higher lows, right? So now you're a disciplined trader. You didn't buy it here, for example, right? You see that this market rallied without you, and you're a disciplined guy, gal. You wait for the pullback. So you get this pullback right here, and you're like, all right, let me buy this. You see that this is about 50% retracement, probably. Yes, almost 15%. Let me actually make this tight. There you go. So you see that this is a 50% retracement. And as we approach to 50% retracement, now you have this bullish candle, which took out previous candle high, and you go long. So let me mark where you're going to go long right here, right? After we take out the previous candle's high. Or even, let's say, we can wait for this candle to close and wait for entry when above this candle's high. So boom, now you're in the trade on this candle right here, and you think, all right, so now we're gonna run. We had a trend line breakout, blah blah blah. It's all looking fantastic, right? And lo and behold, it goes against you. Now, if you actually trade this trade correctly, you have to realize that your stop loss should be wide enough to accommodate the previous swing. So your stop should be somewhere here. And while, yes, it started to bounce at 50%, now you're underwater. So what do you do in this example? First of all, you can, because you should start with a small enough position size, you can actually add once or twice to a losing trade if you start with a small position size. Most traders, again, novice traders, what do? They bet a house on every single trade, and they get 2, 3, 5, 10 trades correctly, right? And they turn $1,000 into $10,000, and they're geniuses, right? And then on the 11th time, they blow up, and there goes that 10 grand, plus losing the initial $1,000. So if you start with a small position size with wide enough stop losses, you can manage out of bad trades in a very 90% of the time, pretty much. Obviously, you will have to take the stop loss here. So now you're going down, and you wanna you see that it hits 618 and this fib cluster zone here that we use in our course. But let's say you see that it's starting to bounce around 618 fib, which is pretty common again. All right. So now when we take out previous candle high of this candle right here, the last candle right here, you're gonna go long again. So you add to your position when we take out this candle's high. So boom, now you're in on this candle. So your stop for this position is, again, previous swing. You go, and then you reach your previous your first entry, but this entry right here is already in profit, right? So what do? You close this at break even and take profit on this one. Let's say now you're doing completely opposite. You're entering short here. Obviously, you would have made money if you entered short instead of long here. But for some reason, let's say you entered short maybe here somewhere, right? Like I alluded to. So this was your entry. It went for you a little bit, but your stop loss still here, so you had to target 1-to-1. Let's say you were targeting this bottom here, and this is a pretty poor entry. Again, either here or here, doesn't matter. Same thing again. So now you want to see where are the fibs here. And again, so you had a poor entry, you had your stop losses here. It goes, you sell it somewhere around here again. And again, you close this at break even, but this, whatever you faded as it was going up, you traded, let's say, a moving average crossover. So you traded a moving average crossover here, right, on this candle. Boom, you sold it. Again, you took this profit, take this one as a break even, done. And that's, so right now I'm showing you 3 scenarios. Whether you entered long here or shorted here, or even if you were shorted late, it doesn't matter. You can still get out of poor entry if you trade correctly and if you manage the trade correctly. Now, obviously, I'm not advocating poor entries, but if you if you actually have decent system that actually has decent probabilities, so something like 60% of the time, when you stack all those skill sets together, they will produce a much better result. And instead of chasing another shiny new thing, you can actually realize it's not about the trading system, but more of how you trade and how you manage those trades. And it also goes again with the money management techniques. Instead of all the novice traders, they're very undercapitalized, so they always bet the house on all of their trades, and eventually the luck runs out. And I'm not even saying 100%. Let's say you're betting 30% of the time, right? 30 for example, you have $1,000, you bet $300 on the stop loss to make $300 1-to-1, and you have 2-3 losers in a row. After the third loser, you're down $900. You have $100 left, and everybody can get a 3 losers in a row very easily. Now, if you increase those probability, and if you decrease the size, and instead of trying to make $300 but make only $100, right? You lose $100 per a loser. You make 3 losing trades. You're down 30%, still a lot, but not something unrecoverable. You still have $600 left, and 5 successful trades afterwards lead you to profitability. As a simple example, if we take 10 trades and you're right 70% of the time, so you have 3 losers and 7 winners, right? So with that in mind, don't bet the house, stop chasing new systems, and realize that it's all about the trade management and money management that will make you successful in your trading. So if you want to learn more about how to do it properly, obviously stop by apexpool.com, or anybody else for that matter who actually has a real experience in trading in the markets. All right, hope this little lesson helps. As always, if you like the content, please like, subscribe, leave a comment. We always appreciate it. And I'll check you out later.